What's going on, traders? Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is July 7th, 2021. Please click the like button on this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to talk about the price action in the headline indices. We're going to go under the hood and check out our sectors and style factors. We'll talk about some of my trades for the day, and we'll wrap up some options order flow. Before we get into all that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump into it. So what did we have today? So we had, as measured by our box scores, S&P 500 up 0.35%. We had the NASDAQ QQQ up 0.21%. We had the IWM small caps down 0.93%. And we had the Dow Jones up 0.32%. S&P 500, you can actually see the futures just started trading here. So we do have this little bit of extra price action. But as of the close today, here is where we were. And what I'm noticing here with the S&P 500 is, we're making good progress. We've been in a really nice trend ever since the volatility we hit about 2 weeks ago in mid-June at this point. We're approaching this R2 pivot level. And one thing I will note is that we are very extended from this 20-day simple moving average. So think about it. If we were to get a pullback just to the 20-day, and pullbacks to the 20-day happen all the time. It is just a fact of life in markets, in individual stocks, and everything. Everything always pulls back to the 20-day. At this point, pullback to the 20-day would be like a 3% pullback, something like that. So yeah, we're getting a little bit on the extended side, but the trend is definitely to the upside. Another thing that I'm noticing as well is the VVIX has definitely bottomed out here, where you can see it's starting to climb. That's definitely a yellow flag for me in terms of, just where we are in the rally and in terms of the risk reward that's currently presenting itself. NASDAQ, you can see, had a nice push higher earlier in the trading session and then faded throughout the rest of the session. At one point it was red today, closed nice and green, up slightly. But this one also definitely getting a bit extended here. Russell closed red today, and you can see it almost slipped into the abyss, but there were some dip buyers that came in and supported the Russell. Keep in mind, the Russell 2000 is now below all the key moving averages, and it's also below this monthly value area. So really just not looking strong technically here. And let's see as well. Yeah, the Russell, it's done this fake out so many times. I think this is anyone's guess as to whether this resolves to the upside or the downside. But yeah, definitely the weakest of all these headline indices. Let's pull up the Dow Jones. Dow Jones, nice green day today, up 0.32%. And you can see we're holding this monthly point of control. With the S&P 500 and the NASDAQ, they're trading at pretty much new all-time highs like almost every single day. And they're actually very extended. And we have the Dow Jones, which is still stuck in value. So this is also definitely lagging technology companies for sure. And I'm going to pull up here our market breadth. Market breadth was positive in everything except for the small caps. And this fluctuated throughout the trading day. At one point, the market turned red, and this, the breadth was very, very poor. Looks like into the close, the breadth picked up a little bit. And overall, not too shabby. Let's take a look at our heat map. And you'll see, yeah, this breadth definitely improved throughout the session. For most of it, it was very spotty. And at one point, it was really just the mega cap tech names that were participating. So you can see Apple had a really nice day. Microsoft, Google, Amazon. It's very tough to get a full breakdown in the market when those stocks are really participating and moving very nicely. And then you can see the industrials started to participate in healthcare as well. Moving into our sectors here, the solar stocks, at one point these were up almost 2% on the session. They closed about flat on the day. You can see this ARK Innovation Fund, which is number 2 on our momentum list, corrected a bit, down 2.34%. ARKG as well, the genomics names had a really nice run. They corrected. Best performing sector, funny enough, was home builders. Let's take a look at the home building group. We'll pull them up over here. Home builders closed above this monthly value area and above this 50-day simple moving average. And you can see that came on above average volume. So I actually have an alert set to see if those home builders keep moving or if this is just a little fluke. And then the ARK Innovation Fund, you can see this had a really nice run. It got a bit extended from the key moving averages, and you can see this is now pulling into that 20-day simple moving average. Let's take a look. Sectors, or style factors, excuse me. You can see the quality style factor was up 0.5%. Defensives were up 0.99%. That was our best performing style factor. And then you can see second best was min-vol. So yeah, defensives and min-vol leading. That's not exactly a risk on configuration. Then you can see the high beta stocks closed down 1.33%. At one point during the day, like in the afternoon, this was over 2%. It was pretty bad. In terms of some of my trades for today, really my thoughts here, and you'll see I really did not do that much trading. If we look, so I did not trade any common stocks. There was nothing that really jumped out at me enough to put a position on. And then in terms of options trading, I got long some QQQ August 20th 361 strike puts for $8.79. This was at 10:02. And really my mindset here is I'm just noticing that a lot of different areas of the market are really getting hit. A lot of these names, like the Chinese names, the travel names, anything with exposure to the economy is really getting punished. And you have this small group of names that's really leading us higher. You know, that can certainly continue on for a certain period of time. But I'm just noticing a lot of different indications that, hey, you know, the risk reward really is not in my favor anymore. You can see this, my VVIX risk indicator here. This is starting to flash a yellow light. And with this indicator, it's really just flagging days where the 5-day correlation of the VVIX and the SPY goes above a 0.2 correlation. Pretty much every time we get a cluster of these white candles, there's some form of sell-off in the market. And you can see this goes, you know, pretty much all the way back. Sell-off, sell-off. You can see even before the coronavirus, a bunch of these, every time you get the cluster of 4. Right now we are on a 2 count, 2 white candles in a row. You can see we had one before this, and it looks like that correlation flipped below the threshold. So this would have been 4 consecutively if not for this blue here. If I do get, you know, 4 of these consecutive white candles, you know, I'll definitely be taking, you know, even more chips off the table. But for today, I just started with a quick little short position on the NASDAQ. Now it actually worked very well. So I entered that at 10:02. And if we look here, so if you look at like the 5-minute chart, I was able to get this on pretty much towards the highs of the day. You can see, I believe this is, yeah, this was in the pre-market. We opened up literally on the highs. Now you can see I put this on around like 10:02, which is somewhere in this little mess of price action right here. So I'm slightly in the money on that. And that's one thing I'm noticing, like with my trading, is the market has definitely gone from just like straight up easy mode like it was in the beginning of this run up to now I notice things are getting a lot more challenging. And there's certain exposures that you'll put on, like Airbnb, for instance, for me. You know, you just have some stocks that are literally just like giving up the ghost here. It's like Airbnb, boom, dropping out of value. A lot of these different travel names, anything with cyclicality, like you can see Booking also closed pretty much on the lows, Expedia as well. We're essentially trading as if, we're going back under a lockdown for this Delta variant. But yeah, there's a lot of areas of the market that are really getting hit. And I know just from experience, like the market moves in these price cycles where, depending on where you want to begin the cycle, you get a really nice rally higher and you get extended from the key moving averages. And you can stay extended for a long period of time. It could be a short period of time. But the next thing that happens after being extended from the key moving averages is a pullback to the key moving averages. One of two things can happen when you pull back. You either pull back and hold, and that refreshes, that leg higher, or you pull back and you break down below the key moving averages. And then once you break below them, if it happens, you trend downward, you could get extended to the downside from the key moving averages, and then everything just kind of repeats. Then you find your way back up to the key moving averages, and so on and so forth. It's this constant cycle of price action. So I look at this and I go, okay, we're extended. We could continue to move higher, certainly. But for me as a trader, I have to look at the risk reward of the situation. And there are certain times when you go, hey, risk reward, like the next step in this sequence is a pullback. It's either we continue to just drift higher in this continued state of lower and lower risk reward, or we pull back. And you have to think to yourself, what am I going to do if we continue to drift higher? And what am I going to do if we pull back? And for most traders, they don't even think about what they're going to do when they pull back. They just continue to add new trades on every single day. And then they get that pullback, and then they have to stop out of every single position that they have, and it just turns into a fiasco. And like I see this all the time where almost every single market correction, there's like a new wave of retail traders that just get completely blown out of the water, and they're just done trading forever. So to me that's just crazy. But yeah, I'm kind of gearing myself up for that next step, which would be, okay, maybe we pull back a little bit. There's nothing wrong with that. So I'll be thinking about that more tomorrow, and that's why I wasn't really adding on additional longs today. So I added that Q's short, slightly in the money on that. And then I had an IWM hedge, and it was originally a calendar spread. The short leg of my calendar expired, so I added a new short leg to the calendar and just reduced my cost basis on that hedge. Let's take a quick look. We'll pull up our options order flow here. I don't mean to get you super bearish on the market or anything. That's just kind of how I'm seeing the current price action. And then, yeah, so let's see here. In terms of options order flow, we have Amazon, which was our individual stock flow leader. I am currently long Amazon, and you can see just a flurry of call activity coming in. Yes, you can see a bunch of orders for July, early July. Yeah, a lot of these are short term. You can see some for 2022, 860 strikes, very deep in the money. You see some for August. So yeah, definitely a lot of activity in Amazon. Apple as well was also one of the flow leaders. Apple, if we take a look at where this one is. Yeah, this one right here, this was a nice close for Apple, not gonna lie. So this one will definitely be on my radar for tomorrow because it just essentially cleared this pivot. Actually, it didn't fully clear it. You can see 145, it'll really be clearing that pivot level, but it at least approached it. I wouldn't be surprised if Apple sort of forms a handle setup. That would be a much more ideal entry for me because you can see that this is very extended from the 20-day. So I wouldn't mind to see this thing consolidate for a couple days and maybe rip out. We'll have to see what happens. We got some Microsoft flow, NVIDIA. And yeah, you can see, based off the flow, where the money is going in the market. Google, all these big tech names. Nvidia is one that I also want to pull up because this is another indication to me that, hey, the risk reward really might not be in my favor here. So Nvidia has been, in my opinion, the market leader of this last leg in the market higher. And this bullish sequence really started, I would say at this point, it's about a month and a half ago in mid-May, when these growth stocks really started to move. And what I mean by that is the QQQ, it bottomed May 19th, and it's been on a beautiful run ever since. Nvidia has been the poster child for that rally. If we look at Nvidia, this was May 19th right here, and Nvidia has been the leader in the NASDAQ. Since Nvidia started to lead, it's never really had like a big extended range downside candle. If you look at this, today's the first day where, hey, Nvidia underperformed the market. It was down 1.58% today, while the NASDAQ was positive. Once I start to see the leaders petering out a bit, that to me is another sign. Hey, this market's not going to be led by XYZ small cap cash losing company. It's going to be led by names like Nvidia. So I really want to see how this one acts tomorrow and what it does. But with that being said, that about does it for this market recap video. Hope you all had an awesome trading session today, and I will see you all tomorrow.